Hello everybody, I'm Ritu Vora and now I'm going to introduce alternative investment for those investors who are continuously looking for investment options that will diversify their portfolio and increase their return. What are alternative investment funds? An alternative investment is a financial asset that does not fall into these categories: equity, income, cash categories. Private equity or venture capital, hedge funds, real property, commodities, and tangible assets are all examples of alternative investments. Here are some features of alternative investments. First is low correlation with traditional investments, relatively low liquidity, high purchasing cost. Alternative investments are classified into two broad categories: tangible and intangible. Intangible, we have precious metals, stamps, antiques, wine. For in intangible, we have hedge funds, private equity, venture capital, derivatives. SEBI has classified AIF into three broad categories. Category 1 is those funds which invest in startup or early stage venture or social venture or SME or infrastructure or other sectors or areas which the government or regulator consider as socially or economically desirable. In category 2, we have those funds which do not fall in the category 1 and category 3 and which do not undertake leverage or borrowings other than to meet day-to-day operational requirements and as permitted in SEBI. We have more four options in private in this category: private equity fund, debt fund, fund of fund. Category 3 tells about those funds which employ diverse or complex trading strategies and may employ leverage, including through investment in listed or unlisted derivatives. In this category, we have two more options: hedge funds and private investment in public equity. And now I am going to explain some of the options. First is venture capital. Startup companies who really want to grow need certain amount of investment. Wealthy investors likes to invest their capital in such businesses with the long-term growth perspective. This capital is known as venture capital and the investors are called venture capitalists. SME funds. SME funding is a financing of small and medium sized business needs. This ranges from technology and equipment finance to working capital finance. Here is social venture funds. It comes under category 1. It is a form of investment funding that is usually funded by a group of social venture capitalists or an impact investors to provide seed funding investment. It is usually for profit social enterprise in return to achieve a reasonable gain in financial returns while delivering a social impact to the world. Infrastructure fund. Infrastructure is a general term for basic physical systems. These systems tend to be capital intensive and high cost investment and are vital to a country's functioning, economic development and prosperity. Private equity. A private equity firm will raise pools of capital or private equity fund that supply the equity contribution for these transactions. Debt fund. A debt fund refers to a mutual fund, an ETF, or any other pooled investment offerings whose underlying investment chiefly contain fixed income investments. Hedge funds. Hedge funds are alternative investments using pooled funds that employ different strategies to earn active returns for their investors. Hedge funds may be aggressively manage or make use of derivatives and leverage in both domestic and international markets with the goal of generating high returns.